Many mortgages coming up for renewal this year and next were locked in during COVID when interest rates hit a record low. Now the Bank of Canada reports those borrowers will likely see a 10% increase to their monthly payment.
Some people it may be more extreme than that, it might be 20%. Some people it may be very limited.
The payment increases will vary depending on the type of mortgage and when it was signed, but the biggest hit will be to those 5-year fixed borrowers who make up 40% of all mortgages in Canada.
The biggest change is going to be the people that took those record low rates at about 1.5% that are renewing in a 4% range today. That's going to be the biggest jump.
According to ratehub.ca, a homeowner who bought an average priced home in 2020 with a low fixed mortgage rate could see their monthly payments rise by $424 a month, or nearly $5,100 more per year. That's nearly a 20% increase. Despite the shock, experts say the impact on the housing market may be limited.
We have slightly more cautious buyer behavior right now, but we still have a lot more buyers than we have homes for sale. So, for a lot of people, they would rather own a home than pay rent if they can.
It's a seller's market here in Halifax, and prices remain high, outpacing price drops this month seen in other cities like Toronto, Montreal, and Calgary. Even with the financial pressure on households, few are selling.
The reason why we haven't seen a lot of that is because what's happened is the property values have gone up significantly. So if someone is a bit challenged for payments, we can typically re-amortize it, or we can take some of that equity out to consolidate other debts or give them a bit of a buffer.
In volatile financial times, Lavender says the majority of his clients are still choosing 3- and 5-year fixed rate mortgages. Jesse Thomas, CTV News, Halifax.